Hi, I wanted to invest in a small cap mutual fund 10 days back. So I have gone through different mutual funds, I have considered different factors, and finally selected these two mutual funds based on my analysis. And I have created a simple Excel file so that you can clearly visualize what are the factors I considered and how the mutual funds are performing. If you want to know the name of the mutual funds, then I will reveal fund one name in the middle of this video and fund two name at the end of this video. So continue watching this video. The first factor is a 1 year return. Fund one given 70% and fund two given 58%. As you know, the last bull run gave excellent profits to all the stocks, the mutual funds. So in this analysis, we can't consider the 1 year return as a major one. So let's skip to the second one. 3 year return. Fund 1 has given a 3 year return of 38% and Fund 2 has given a 3 year return of 36%. That means within 3 years your money got doubled. So 38% per year for 3 continuous years is a very good return. Both the funds performed very good in this. And the 5 year return of 25%. So in this case also within 4 years your money got doubled, and 25% per year is a very decent amount when we consider a period of 5 years, and both the funds are given the same returns, and this percentage is very excellent one. This mutual fund has the potential to give 20 to 25% per year, given the factor that if you are investing for a long term like 5 years to 10 years, so in that case it will definitely generate 20 to 25% per year returns. If you are investing in SIP method, then in fund one you have to pay a minimum of 1000 rupees per month, but in fund two you can pay as low as 500 per month. If your funds are limited, then you can go with the fund 2, and if you can afford to pay 1000 rupees per month or more, either you can go with fund 1 or you can go with two lots of fund 2. That based on your further analysis and fund availability. In case if you can invest more, then you can invest half of your money in fund 1, you can invest half of your money in fund 2. That also will generate a good returns. So coming to the focus, fund one is right now focused on chemicals, consumer durables, and metal stocks. These alone contribute to more than 40% of the portfolio. So if you see the sectors, chemicals and metals have a very good future in the for the next 3 to 5 years. So those stocks will perform very good in the upcoming years. And consumer durables are like these companies will always perform whether there is an economic crisis or something. So overall, the portfolio is looking very good if you are investing for the 3 to 5 year period. Fund two is focused on construction, technology, and chemicals. As already said, chemicals will give excellent returns in the next 3 to 5 years, and the technology, as you know, we are in technology stocks will always give good returns. And coming to the construction part, right now in India, we are mainly focusing on the infrastructure. So the construction related stocks also will perform very good in the upcoming years. So overall, the portfolio of both these mutual funds are looking very good. So the fund one name is Kotak Small Cap Fund. Coming to the expense ratio is the charge that you pay to the mutual fund house. So when you sell your mutual fund holdings, then you have to pay a small commission to them. So 0.48% in fund one, 0.37% in fund two. Oh, these are very low. So lower the expense ratio, the more profit you will get. So 0.48% and 0.37% is very low, and so both these mutual fund offer very low expense ratio, which is good. Coming to the diversification, if you are investing, then we should always go with the well diversified portfolio. So if you consider both these funds, they are invested in 7 to 8 different sectors. So they have invested in chemicals, technology, metals, consumer durables, FMCG. Whenever there is a crash or something, or whenever there is a boom in a particular sector, this mutual fund will always give good return. So coming to the fund size, Kotak Small Cap Fund is having a AUM of 6,700 crore and Fund 2 is having 8,100 crore, which indicates that many people are believing in this mutual fund and they're putting their money in this one, which is a good factor. But also if the fund size keep on growing, then the amount of return you will get also get reduced. But 6,000 crore and 8,000 crore is not a very big amount, so their mutual funds will know how to manage their money and it generate the good amount of returns. Coming to the PE, price to earnings ratio, Fund 1 is having a 35.5 and Fund 2 is having 33 PE. So this is the standard one. So this is also a positive news. Coming to the beta, how volatile the mutual fund is, it is having 0.9 and 0.73. These are very low volatile mutual funds. So the price fluctuation is very low. So this is also a good factor to consider. In the top five contribution, this is related to the how much the portfolio is diversified. So the top five investments contribute just to 21% of the portfolio. So the rest of the stocks contribute to 80% of the portfolio. 21% indicates that this portfolio is very well diversified. Coming to the name of the second mutual fund, that is Access Small Cap Fund. So the fund one is Kotak and fund two is Access Small Cap Fund. So right now in small cap mutual funds, these two are the best performing mutual funds. So if you want to invest in a small cap mutual fund, you can consider either one of them, or you can invest in both based on the fund availability. And disclaimer: this is not an investment advice. Please do your own research. If you like this video, please hit the like button. And I will be soon coming with another video of top two mid cap mutual funds. So if you want to know about that, then subscribe to our channel, and thank you for watching.